Well, hi everyone, and welcome back for this next session. And we're really pleased to be joined by some great friends of RFI, nCino, for the Environmental, Social and Governance panel. And this is really talking about how ESG is redefining success in banking. And I've got two special guests with us today. I have Jennifer Geary, who is General Manager for EMEA for nCino, and Mark Bernhardi, who's General Manager for Australia Pacific for nCino. Jennifer, introduce yourself and your background and what you do for nCino.
Yeah, hi, Julien. So as you said, I'm Jennifer Geary. I'm the GM for nCino in EMEA. My background, I've worked in financial services for pretty much all my career, apart from a spell working in an NGO. I'm interested to talk about this topic because we really see it emerging at great pace in Europe, and we feel a real social imperative as well to help with this movement for ESG. So really pleased to be here today.
Fantastic. And Mark, please introduce yourself to the audience.
Hi, Julien. Yes, thanks for having me. I'm Mark Bernhardi. I've also, like Jennifer, spent most of my career in banking. I've been with nCino for the past 3.5 years, leading our practice here in Australia and New Zealand. Like Jennifer, it's a pleasure to have Jennifer join us, because we see a lot of these trends globally impacting Australia and New Zealand, and I think it's a fantastic opportunity to discuss what we're seeing and some of those trends with the audience.
Fantastic. And just with nCino being a listed company, this is their safe harbor statement if anybody would like to take the time to read it. But look, we'll get straight into the discussion because really ESG is one of those things that is very important across all industries, and in banking we've seen it emerge in many different ways when it comes to I guess the agendas, the strategies of businesses. But really this next part, we're really wanting to discuss why is the topic relevant? What is it by definition? Because there are obviously a lot of different components to ESG, and why has it become mission critical for banks? So Jenny, firstly, please let us know sort of what is sort of really key about this topic and some of the definitions that you learn about and you work with other institutions.
Yeah, so just on the definition side, ESG, we're talking about environmental, social and governance considerations, and it's the emerging framework by which banks, companies, organizations, and all of us, I think, are going to be assessed in terms of how we operate more sustainably for the future. So if you think about how we've historically measured performance in the financial markets, it's been a very one-dimensional, financial-driven set of performance metrics. And here, what's happening, and it's such an exciting revolution to be part of, is I think the emergence of a much broader-based set of criteria through which we look at how we're operating, how we're thinking about addressing the climate problems, how we're addressing social issues, and how our organizations are governed to ensure that they continue to do the right thing. And it's becoming, even more, critical now, because in financial services, banks and related organizations and investment companies and pension firms, they get to choose where they allocate their capital, and they get to choose where investment gets sent. And there's a once in a generation opportunity here to make better choices in terms of where we allocate our capital, where we allocate our investments. And this is coming. In EMEA, we see it coming. Yes, it's regulated. There is a strong regulatory drive here from the EU, but we also see huge public pressure and a desire for organizations to lay out their stalls and to say how they are going to address these really pressing issues of our day today.
Yeah, and I think it really sort of starts becoming quite evident when customers maybe start sort of voting with their feet. And making decisions, making choices, making evaluations on brands, making evaluations on product choices based off all of these factors. And that starts from the very sort of straightforward consumer decisions, but then all the way up to sort of big business and big corporates as well.
Exactly.
But talk to me about this slide in particular, because it's really sort of showing some fairly interesting data here as well. I mean, particularly in the loan side of things. I mean, I was quite fascinated when I was looking at this. The sheer demand for financial services products is sort of becoming quite evident in this area.
Absolutely. Yeah, the demand for green finance is incredibly hot at the moment, and in many places, I think, exceeding the available supply. And it all started, as you said, with, well, I don't know if it all started, the latest iteration of sustainability considerations emerged with the development of the 17 Sustainable Development Goals, or SDGs, at the Paris Climate Summit in 2015. And this was adopted by 196 organizations plus the EU, 196 countries plus the EU around the world, as a framework for how we were going to address the issues of our day, and also how we were going to measure the success of doing that. So obviously this week, starting on the 31st of October, we have the UN COP26, which is the 26th gathering, conference of the parties, where the countries of the world unite to talk about how we're going to address the Sustainable Development Goals. So it's really topical that we're having this conversation today. But yes, what you see coming off of that, led by regulation, led by the market, led by consumer demand, is a real desire for green loans and green finance and green projects and organizations that are tackling the ESG challenges of the day head on, and we see that only continuing. And if we think about around the world, I think the EU has been something of a leader in terms of the regulation that it has brought out. So it has something called the SFDR, the Sustainable Finance Directive Regulation, and also the EBA Loan Origination and Monitoring Guidelines, which actually compel financial services organizations in the EU to demonstrate how they are considering ESG in all aspects of the loan cycle. So we see that coming through really, really strongly. And then I think, as we think about what's going to happen around the world, the speculation is that the SEC is looking at the regulation that the EBA has put in place and is looking to do something similar. So yeah, it's taking off. It's really hot in all places around the world. And I think also, if you think about the last 2 years, what we've seen. So people worried that the COVID pandemic might push environmental considerations onto the back burner. But in fact, if anything, the opposite was true. It seemed to throw our vulnerability and our fragility into sharp relief. I think it really drove the message home. And when you combine that with some of the climate issues that we've had, the terrible, terrible wildfires in Australia, also in the US, floods across Europe, the issue feels much more proximate and urgent and tangible than maybe it ever did before.
Yeah, there certainly seems to be a building urgency, and I mean, there's the right sort of political climate at the moment to hopefully, I guess, drive some very sort of key decisions in this space. Looking at, I guess, at all of these different views and looking globally, there are obviously different factors, different approaches in the different markets. I mean, you've mentioned quite a few sort of key global initiatives, but and in North America and Australia. But I guess are there some more sort of I guess more unique developments in how each market is approaching the situation?
Yeah, I think, as I say, it feels like a wave that's moving around the world. But I think it's also important to touch upon the things that are that are going to unite us over the next while, and particularly if we think about the financial services industry. So the UN has set 4 goals ahead of COP26, which, as I said, starts at the end of this week. One is to secure global net zero and to keep our temperature from rising not more than 1.5 degrees from pre-industrial levels. We need to adapt to protect communities and natural habitats around the world. Point number 3 is that we need to mobilize finance. And point number 4 is that we need to work together to deliver. And I think, obviously, the reason we're here today is to talk about how we mobilize finance around the world. And really the aim is that every financial decision that we make, that banks make, every lending decision they make, every project that a company undertakes is done with the ESG goals in mind. I mean, hopefully at this stage we're pretty, the issues that we face are beyond debate, and as I said, very, very tangible around the world. But yeah, I think so. On the global scale, you've got the COP26 and the goals from there. North America, as we say, I think quite regulation driven so far, or expecting to be quite regulation driven. Europe, you've got the regulations already in place since the 30th of June this year on EBA loan origination and monitoring. And well, Australia, I know Mark will speak to that in time.
Excellent. And now sort of looking at, I guess, one of the sort of key markets that you operate in, I guess it's important to understand, I guess, what are some of those actions that we're seeing as a result of newer regulations. And I mean, at RFI, given the fact that we do a lot of data collection of banking consumers, we're a sucker for a good data slide. And talk to me about these results, because this is surveying actual people working in the banking industry. We survey the customers of banks. Yeah, talk to me about the results here.
Yeah, this was a survey that nCino commissioned in the UK, as it says, of 200 banks and banking managers. And what you see, if I start on the right, basically, a brave 1% of people surveyed said that they weren't doing anything in relation to ESG. And frankly, I'd even sort of question the 1% given the regulation and given what's going on. But, almost 40% establishing carbon neutral goals by specified deadlines. So in other words, we will be carbon neutral by 2030 or whatever. And, almost half already adopting their technology to respond to the ESG framework. And, given the priorities that banks have, given the expense, given the challenges of their systems, to know that, half of those surveyed are already changing their technology to embed these new ESG considerations in every stage of their loan cycle, I think tells you that this is something that is already well underway. And I should say at this point, it's easy to think of it as a cost, but actually, what the previous slides showed was the opportunity that green finance loans are easier to distribute. Organizations that embrace the ESG agenda are 2.5 times more likely to be successful, according to a survey by Accenture. And ESG is really seen as sort of both a lead indicator and an absolute must in terms of being a functioning, sustainable organization. So yeah, we're well underway in the UK, in Europe, and I think you'll feel the wave moving very quickly around the world.
Yeah, fantastic. It's kind of like it's becoming that essential metric in a few organizations. And we know that from some of our clients at RFI, reporting back on how customers see a bank or a financial service provider when it comes to ESG is becoming more and more important to them. But it's really a factor in sort of assessing whether something is worth doing as a financial services product. It's kind of like doing credit risk decisioning. It's environmental risk, it's social risk, and all of the other sort of factors that might go into whether this is an appropriate thing to be doing for the market or for the customer or for the environment, really. But there are some other sort of key things that sort of jumped out at me in terms of the impact, right? Because if businesses are going to take these leaps, it has to have an impact across a variety of different areas.
Yeah, well, absolutely. As I said, embracing the ESG agenda is very good business as well as the right thing to do. So, what the metrics here speak to is, there's a market for ESG and green products, and it's positively impacting both revenue and profitability to embrace the agenda. But guess what? Customers want this, right? Customers want to know what banks and organizations are doing, how their money is being invested, how they are playing their part in diverting funding to the activities that are going to address the problems that we have on the planet at the moment. And people also want to work for those organizations. So it's a positive recruitment factor as well. People go, we know this at nCino, people go and, read websites, they look at banks, they look at customers, they want to be part of organizations that are doing the right things to embrace ESG.
Yeah, and we've covered youth banking earlier on in this conference, and I think that there's an emerging generation of probably very cynical consumers, and they look at this sort of a topic, and they don't want lip service paid to it. So they're really interested to see the tangible benefits towards meeting some of these goals that are being put forward.
Yeah, no, and there's a word for that, right? You know, the word is greenwashing, and I think it is something that we need to be very, very alive to. Just as you know, in the past, you could have credit portfolios that had a blend of good and bad things in them. You know, we need to be alive to, you know, portfolios being greenwashed, being touted as that, and this is why trust in this area is just so very, very important. We need independent metrics. We need to move towards standardized ways of measuring. We need independent auditing, and you know, there's a long way for this to run as a topic in our industry, but I think it's moving very, very quickly. You know, we've got a couple of customers. You know, one bank is already classifying its portfolio of loans by reference to which of those 17 SDGs the bank's project or the bank's efforts are actually addressing. We have another bank that's developed its own proprietary scoring mechanism for all of its investments on a 7-point scale from green to brown at the other end. And it's exactly as you said, Julien, you know, just like credit in the past or, you know, other financial performance considerations became a constraint in portfolio management, I think what we're going to see is those ESG factors becoming that kind of constraint. So in other words, if you max out on the amount of brown loans in your portfolio, you're going to need more green finance. And again, that drives demand for the right kind of work and the right kind of projects.
Yeah, definitely. Perfect. Now, turning our view back to Australia and New Zealand, there's obviously a lot going on here. We live in a sort of, obviously a very unique country, and we've seen, I guess, climate take its big impact here as well. Climate change, I guess that is. And we've seen sort of banks take certain initiatives, but Mark, how are you seeing this develop in the local market? It's a bit of a political, well, not a hot potato, but there's certainly some pressure here locally. So how are you seeing it play out for the institutions?
Yeah, thank you, Julien. I think much like you, we've all seen the headlines around COP26 and, you know, Scott having to do some pretty heavy negotiations before heading over to make sure that Australia has that commitment to that net zero target of 2050. But sort of just picking up on Jenny's comments, I think Shane Elliott was in the newspaper today talking about that very topic, greenwashing, and how important it is for ANZ Bank to start to look at making sure they've got the right frameworks and policies in place, that they know that the finances being reported as green is legitimately green. You know, highlighting the fact that there's this excess capital looking to invest in green initiatives, and so there's going to be people looking to take shortcuts to making sure they access that capital. But you know, from my perspective, joining nCino 3.5 years ago, you know, we had that Royal Commission, and I think we can go back to that very point when there was this real increased focus by customers on culture, governance, leadership in the banks, that I think is still now playing its way out through now a focus on environmental. And you know, and I don't think it's just a coincidence that you know, environmental is attached to social and governance, because I do genuinely believe that if you have the correct policies in your board, in your leadership team, in how your teams are working, you're actually going to be more effectively positioned to take advantage of ensuring that you're also adopting those prudent sort of lending guidelines as it relates to environmental. So I think ANZ has highlighted this as a key topic. We've seen NAB coming out with very green focused investment products. CBA were in the spotlight recently around ensuring that they've got the reporting in place to make sure that they have visibility of where they are lending their finances. And in Australia, we've also now got this Australian Sustainable Finance Initiative, which has actually clearly laid out a roadmap for our banks to be able to be compliant and have all the necessary processes in place by 2030. And that's everything from ensuring that it's embedded within the financial institutions, all the way through to sort of committing to making sure that the Australians are enabled to make the transition. You know, as a country that's going to need to transition from fossil fuels to green, that's going to require significant capital. And I think banks are going to have to play a critical role ensuring that that transition can take place. And finally, I think what's really encouraging is that Australians seem to be leading their global peer group in terms of their awareness of the importance of climate as it relates to lending. So there was a recent survey done which highlighted that, you know, Australians were about 10 basis points ahead of global peer groups in just placing climate change as a #1 priority for them as it relates to seeing how banks are actually doing business. So I think a lot of encouraging signs. I think that, you know, it's, as I said from the very beginning, Australians often been known to be a bit of a laggard when it comes to a lot of these regulatory changes. And I think what we're seeing is we're certainly starting to get ahead of that curve and very much catching up to what some of those things that are taking place in Europe and the US.
And I guess moving on to sort of some key sort of discussion topics, but mainly around the challenges, because I think when it comes to how the market operates currently, it's not as if the institutions can go cold turkey and just sort of drop the industry straight away. Or I guess undertake different activities that leave other consumers behind or businesses behind straight away. There's kind of like a weaning process. I mean, what are the sort of challenges? Is it that sort of weaning process, trying to move businesses away gradually, and what sort of time frame do they need?
Yeah, look, as I said, I think banks in Australia have already been on a significant trajectory of change. You know, some of that off the Royal Commission, but also off the back of COVID. We've got a lot of digitalization investment going on. And that, I think, could be perceived as a challenge. I think it's also an opportunity, right? You've got this environment now in the banks that are receptive to change. You've got customers that are receptive to change, and you've got a customer base that is very aware of the need for climate-related lending policies. So whilst I think, look, the challenges are significant because you're having to take on another thing within the banks that you need to adhere to, I think, as Jenny referred to earlier, it can actually be a great opportunity. You know, if you can get ahead and show that the bank is investing in the space, putting the reporting in place, then I think customers are going to respond well. You know, as you said earlier in the conversation, they respond with their wallets and will want to be associated with banks that reflect the importance that they put on climate change. So I think that we've certainly got the social and governance aspects of things. Banks need to continue to drive to make sure they've got an equitable workplace, they have diversity in their leadership team, that their leadership teams reflect the importance of these environmental and climate change initiatives. And then as you play that through, then, you know, really adding onto that sort of digital investment, digital transformation initiative, you now need to also look to make sure that those lending policies from onboarding to origination incorporate all of those necessary regulations now, not waiting for a sort of phase 2 of that transformation work.
And that sort of leads to, I guess, having that right technology in place to be able to monitor all of these outcomes, monitor some of the metrics that are being put in place as the sort of developments in new products and new ways kind of tend to move forward. So we can keep track of naturally how the portfolios are growing, the types of customers that you're bringing on board, or the types of customers that continue to exist within the business as well.
Exactly.
And that additional role of technology, it naturally plays a big part in keeping track of these things. Are there some really sort of interesting innovations? Are there some interesting plays being used out there?
Yeah, I think, look, the KPMG recently ran a study, and they identified that ESG was one of the biggest drivers of innovation within fintech at the moment. So, you know, certainly Jenny and I sit within our own organizations of making sure that, you know, we have a global footprint. We serve banks in the US, in Europe, and in Australia, and I think that puts us in a great position to making sure that we're deploying capabilities onto our platform that is allowing all of our banks in those various markets to respond in an appropriate way. But certainly, I think from a fintech perspective, it is driving a lot of innovation, and that innovation is coming in the form of reporting. I think there's a lot more data sources starting to become available. so that banks can use those to ensure that they get the right lending and customer onboarding policies in place. But also with just cloud software and SaaS, I think it's a fantastic opportunity to look for partnerships, right? There's, as we've mentioned, there's so much change going on. I think banks seeking to try to do all of this on their own is going to be incredibly tough from a challenger's perspective. So finding partners that align to the importance of these policies, I think, is critically important, because they're going to help you innovate. They're going to help you think through, especially from a global perspective, how best to roll your technology out and get ahead of some of these regulations.
And Jenny, you would have seen some interesting examples of that as well.
Yeah, I know, 100%. And I think, one of the real challenges is that, it's not yet fully bedded down, right? The metrics, the way in which we're going to track this, it's still a nascent area. And I think you'll see over the next sort of 12 to 18 months, probably some of those frameworks start to crystallize a little bit more. But right now, and indeed, IOSCO raised this as an issue recently, that the lack of established frameworks is a barrier to implementing these. So what you need, and how we're supporting our customers, is you need to be extremely agile and flexible at the moment in terms of the measures that you use. And some of these are coming, self-declared from customers and borrowers. Increasingly, I think you'll see independent data feeds that actually, publish things like, CO2 reduction or temperature alignment metrics or whatever it is. So you need a platform that's going to allow this to evolve over the coming years. And I think, as a bank, it's not, it's not that difficult. And as you said, it's not ripping things, it's not ripping out everything you've done before, but it's enhancing your current customer onboarding, your discovery, your assessment and underwriting processes to take account of ESG considerations, whether you're financing a customer or a particular project, or you're looking at your investments. It's looking at putting non-financial covenants in place. So in other words, if we advance money to this particular project, we want to be able to see that, whatever the metric is, that CO2 avoided or megawatt hours of power generated through green sources are, that those goals are being met. And then it's also, post the loan, when you go into portfolio monitoring and management, it's being able to monitor all of those metrics and looking across at the performance of your entire portfolio, so that you as an organization can continue to meet your commitments to your customers, to the public, to the market, and that you can be alerted if something goes out of kilter, and you can take corrective action to make sure that you keep everything within the goals that you set yourselves. So technology for banks obviously underpins all of those different pieces along the way, and you need a platform that's going to help you do that, and that's going to help you evolve.
Yeah, fantastic. Well, I think that there are some really amazing takeaways from this conversation. I mean, one thing that I'm sort of learned in preparation for this session, and obviously listening to you both, is that there's a big technology play here in terms of making things, I guess, a lot more straightforward when it comes to keeping track of some of these key initiatives. But it really seems to be a skill set and an ethos that needs to be part of an entire organization as well. Like if you think about a business banker needing to work with a client to try and understand what kind of, I guess, products would be suitable for them to help them transition to let's say, a carbon neutral scenario, that's a skill set. And these skill sets need to obviously be deployed also when looking at the technology side of things. I mean, what are some of the key takeaways that you find, or even predictions, right? I think that's probably another very interesting space to go down, is what are you sort of predicting for the future in the short term or even long term?
I think sort of just extending from Jenny's comment, certainly from my observation, banks have largely had ESG in a very specialized part of the bank, and I think traditionally even more so in the institutional and corporate side of the lending. I think one of the key trends that I think we're going to see is that needs to spread right across the bank. So all the way down into business and small business. And the banks are going to need to move some of that away from the specialist teams to right across the organization. So I think an important focus for banks is going to need to be raising awareness within their organization of what ESG is, what reporting looks like, what good lending and onboarding looks like from a ESG compliance perspective, all the way through into investing into the technology then to report on that. So I also mentioned partnerships. I think that's a critical component. So, both partnerships locally in Australia from a technology perspective, but also global peer partnerships. One of the things that we see a lot of value is connecting customers in Australia with other customers in the US and the UK. Banks don't see their ability to respond to ESG as a competitive advantage. So I think collaborating with a peer group and understanding what they're seeing, how they're responding to that, how they're using platforms and technology to respond, I think is another key aspect in which banks can respond and be very successful at getting ahead of the issue.
Definitely. And Jenny, some key takeaways from you. I think we've obviously learned a lot from the perspective of looking at technology and I guess some of the newer initiatives that might come out in the newer agreements. But from your learnings, what will you see in the future?
Yeah, I second everything that Marcus said. I mean, I think this topic is going mainstream. It's no longer about having a sustainability department. It's about sustainability underpinning everything that you do. And I think that organizations, if they haven't already, will find their customers, their staff, all of their stakeholders looking for them to do this. So I would say, read everything you can, look at your organization, look at your personal behavior. I mean, the things are not going to get better unless we all change how we live and how we consume. But the impetus for change, I think, is there. It's coming, whether organizations like it or not, and it's going to just, I think, transform how we think about the performance of our industry and our industry's contribution to the world. I think it's a really exciting time to be here. It's changing. There's an opportunity now to influence behaviors that will impact, the coming decades. And I think it's great to be part of it. And I think it's really exciting.
Excellent. Well, it doesn't take long for, I guess, the market to realize that a big risk becomes a big opportunity. And I think that's certainly a tide that's sort of turning to make sure that everyone's on the same page when it comes to that. But look, thank you very much to both of you, Mark and Jennifer, for joining this session. Look, just really like to conclude that this topic is really, really important. It's very, very closely linked to how banks have an ability to change with the times. As a very interesting example of that is how the banks had to change as a result of COVID. It needs to really be shown in terms of their ability of operational excellence and also their ability to use technology in the right way. These models are really important. And I think, some great examples from Mark and Jennifer in terms of how institutions are adapting and evolving to this very, very important space. But look, thank you for everyone for tuning in and enjoy the next sessions. Thank you.